And welcome back. Another weekly update. It is Tuesday. We're a day late. Our apologies. Tuesday, October 28th. We're back. Weekly update. And just a reminder, the government's still shut down.
28 days.
28 days and counting. Nice little vacay, unpaid.
Yeah.
Yeah,
Man, I hate it for those people. Yeah. But I'm sure Congress is still getting paid.
I'm sure they're still getting their direct deposits.
Yep. Every month, every week.
So, Gary.
Yep.
Fed meeting.
Fed meeting tomorrow. Here we go.
What say you on rate adjustment?
25 basis points.
Okay.
I think that's the overwhelming sentiment around the capital markets world. I think you've got a couple things that are weighing in. You know, obviously the Fed has dual mandate inflation jobs, right? Keeping those. And right now, without the reports, there's still enough data out there that says and leans towards the job situation, employment situation is not looking good.
Yep.
We talked about it today earlier. The 30,000 jobs that were cut at Amazon this week. More to come. Other organizations are talking about the same. And not uncommon this time of year going into Q4, Q1. Companies are trying to lean up a little bit, but that doesn't. I mean, I hate that. Like we're definitely not.
Number.
Yeah, it's a big number, and I think we. That's where, again, it goes, bad news in the economy typically means rates come down.
Yep.
We're by no means rooting for bad news, but the pendulum of jobs and inflation is definitely leaning on the job side right now. Now, the big question is going to be what do they do in December? So I think the rate cut is going to be a bit of a nothing sandwich on tomorrow. It's going to be what the next couple hours that Powell talks about in his speech after in the forward guidance they give. Remember, there is no meeting next month. So we're going to get an idea of what that looks like for December. So, I mean, I think let's see what the old Fed watch.
And just a reminder, like when Gary says nothing sandwich, it means, our lenders bake in this projected cut before the cut happens. So the rates we're seeing today are more than likely assuming a 25 basis point cut. So it's the example we always use. If Apple announces they're releasing a new iPhone, the stock reacts to that. There's no product yet, but the stock reacts like, oh, they're coming out with a new product. That's got to be a good sign. So same sort of thing here. When there's news on the street of a rate cut, our lenders have to remain competitive, and so they adjust and they work with their investors to adjust.
So the interesting thing, the Fed Watch tool, anybody can go look at this. It's cmegroup.com. The October meeting is a 99.9% chance of a rate cut tomorrow. December is still looking at 92.9. 25 basis point rate cut. Okay. So that would put us in the 350 to 375 range. And then January is a 50% chance of another rate cut.
Heading in the right direction.
Yeah. So good news for small businesses, big businesses in general. Cost of funds definitely coming down. Those definitely aren't tied to our rates, but those kind of global macro numbers help
have an impact,
push things down. Yeah. So there are some other things that this week are kind of interesting to note. So a longtime industry kind of pundit guy, Barry Habib, some love him, some hate him. It is what it is.
Smart guy.
Yeah. So he is now, he's working with the Bill Pulte, who is the head of the FFHA, and they're working on LLPA price reduction. So what that means is loan level pricing adjustment. So credit score of 680 versus a 720, your price at 680 is going to be higher than your 720 in most cases, right?
Yep.
So what they're doing to try to get things more cost effective and affordable is working on those the
Loan level.
working yep, absolutely. So that's an interesting, I don't know how quickly they can get that done.
Yeah.
The it's hard, it's kind of hard to say, but that is one thing that the government is working on, trying to actually, I'm sorry, he was appointed to the Fannie Mae board of directors. Sorry.
Got it. I was going to
Yeah.
ask. I thought it was either Fannie or Freddie, and that was the position he would have the most, like, to do loan level price adjustments. You'd have to be there, right?
Yeah. 100%. Yeah.
Yep.
Yeah. I don't. So yeah, that it definitely could be interesting.
Yeah.
And that's a lever that, I mean, a few years back, they did some adjustments, and it definitely impacted loans in certain, like, pricing in certain areas got worse. And it was actually for, like, good credit loans got penalized. It was kind of a weird deal, but
so is the best way to think about this is when we see shifts in rates, it's pretty blanket across all the states, where that's not necessarily how pain is felt, right? Like, there could be pockets of the country that are hurting and need this extra boost. So this loan level pricing adjustment allows them to implement something that on a much smaller scale.
Yeah, I mean, you could split hairs regionally, but for the most part, the rates are the rates based on kind of wherever you are. There's not a tremendous amount. Now, Fannie and Freddie might have different pricing adjustments. So you could see in a loan, a Fannie loan versus a Freddie loan might be a little bit, Freddie
Different.
might be cheaper than Fannie. And so it just depends. But I mean, it's not even something that when we get our pricing back, I mean, you can dig into it, Fannie versus Freddie, but when we run the scenario, it gives you the best pricing, the best available scenario.
Yeah.
So
interesting.
Yeah, so,
all right. Well, so tomorrow we'll learn more. We'll do a debrief next Monday on what we've learned, and if there's anything. Again, with the government shutdown, they are flying somewhat blind, but I think, as Gary mentioned, there's enough data to say that jobs and inflation are having enough of an impact that another rate adjustment is needed. So we'll see what Powell says after the meeting tomorrow. And I would say, it's starting to feel like people that are locked in the the threes are starting to look at, hey, I need to access equity. We might be at a point where it makes sense. So get your mortgage plan together, get in touch with your loan officer, and get your ducks in a row so we can attack when the pricing is right.
Let's go.
Awesome. Thanks, Gary, always, for the information. We'll be back next week. And a reminder, give us a like and a subscribe, and smash that like button, and leave us a comment. Let us know what you think. Give us some feedback.
Let's go.
You can be
Let's
honest.
chat.
You won't hurt our feelings. We're pretty thick-skinned individuals. All right, everybody. Have a great week. We'll be back next Monday, and be on the lookout for other content we're pushing out this week. Take care.
See you.